Hello, everyone. Thank you for joining the Connecticut Green Bank's Fall Quarterly Update webinar. We appreciate your time today. My name is Rudy Stirk, the Director of Marketing and Communications for the Green Bank, and I'll be joined by a number of colleagues today on our presentation, who I will introduce as we go through the slides. So first, a few housekeeping items before we start. We are recording today's session, and we will send out a follow-up email to everyone who registered with the link to the recording and other resources that will be mentioned during today's presentation. We will start our session with a few organizational updates and then go into our solution lines and have our program teams provide updates on our various programs. At the end of the session, we will have time for Q&A, so please enter your questions throughout the presentation. Just type them into the GoToWebinar question box, and then we will do our best at the end to answer them. If we don't get to them all, we'll do our best to follow up with you directly after the fact. Sometimes questions are easier answered one-to-one than they are in a larger group setting. So that is our agenda, and now it is my pleasure to introduce the Green Bank President and CEO, Brian Garcia. Brian?
All right. Thank you, Rudy, for that introduction. Good afternoon and good morning, everyone. This is Brian Garcia. Let me just do a quick introduction of the Connecticut Green Bank. Many of you on the line know of us, but not everyone. We have new folks here with us today. We are the nation's first state-level green bank. We were created through an act of legislation, Public Act 1180, in 2011. So we've actually just reached our 13th year. We're a quasi-public agency, which means a couple of things. One, it means we get to use private sector disciplines to achieve public sector goals. Anytime we're thinking about mobilizing private investment in the green economy, we need to make sure that we are operating at the speed of markets. So being a quasi-public helps. We're also a megaphone for the ambitious public policy objectives of the state of Connecticut. We're a small state, but we punch above our weight, and our goal is to really attract private capital around the country and around the world into Connecticut. So by being a quasi-public, we get to play our part in attracting and mobilizing private investment in our state. Our mission is to confront climate change. When we think about confronting climate change, I think all of us lean into two of the key pillars in the Paris Agreement. The first is to mitigate emissions, to reduce or avoid greenhouse gas emissions so that we don't exceed the 1.5 degrees Celsius global warming. The second is to encourage investment so that we become more resilient to the impacts of climate change. We know climate change exists, and we need to make sure that we're making the right investment so that we can become more resilient to its impacts. So that's how we confront climate change, but we do it by increasing and accelerating investment. Investment is the most important part of the inputs into our process. And when we increase and accelerate investment, we get the social and environmental outputs and outcomes that we're after. We get, Connecticut's green economy creating more resilient, healthier, and equitable communities. So that's our mission. Our vision is inspired by several people: the late Maya Angelou, the late Mother Jennifer of the Daughters of Mary of the Immaculate Conception, and many others, including Mary Evelyn Tucker at the Yale Divinity School. But our vision is a planet protected by the love of humanity. We can't have environmentalism without humanitarianism. Let's go to the next slide, Rudy. We have three goals as an organization. When people think of green banks, they usually think of the first goal here on the left, which is to leverage limited public resources to scale up and mobilize private capital investment into our state's green economy. So using a little bit of public to mobilize multiples of private. And we do that with the third column here. The focus is to strengthen Connecticut's communities, especially our vulnerable communities, as a result of the passage of Public Act 20-05. Vulnerable communities has a specific definition here in Connecticut. It includes low to moderate income communities, Community Reinvestment Act eligible communities, environmental justice communities. So it is a definition where we want to mobilize and strengthen investments in those communities so that the benefits of the green economy can be available to all individuals, families, and businesses. And then lastly, we pursue investment strategies that advance market transformation in green investing. Our Green Liberty Notes, which we're going to hear about from David today, our Green Liberty Bonds, those are all things that are transforming markets because we're trying to provide opportunities for individuals to invest in the green economies that they want to create, while also ensuring that we're supporting our organization's financial sustainability goals. Okay, let's go to the next slide, our solution slide. So we're going to go in and out of some of these solutions here today, but this is the way we think about our different segments and channels as an organization. We've got our home solutions, building solutions, investment solutions, community solutions, contractor solutions, and energy storage solutions channel of different products and programs, and we're going to hear about several of them in the course of our conversation here today. Next slide. So I had mentioned earlier that we had just entered or finished our 13th year following the passage of Public Act 1180. So we measure our impact quite extensively. We have an investment to E4 impact focus, E4 being energy, economy, environment, and equity. So as we increase and accelerate the amount of investment into our green economy, we deliver on these social and environmental impacts that we're after. So the first one here being on the energy side, we've helped enable more than 60,000 families, more than 8,000 businesses, providing them access to capital to finance clean energy improvements at their homes, at their businesses. And we all know that with energy efficiency, with renewable energy, that can save and reduce energy burdens. With that deployment, we've enabled over 700 megawatts of renewable energy deployment and nearly 90 million MMBTUs of energy savings through our efficiency projects that we've helped finance over the last 13 years. That investment in those types of projects has led to nearly 30,000 direct, indirect, and induced jobs. That investment has also led to the creation of tax revenues for our state in terms of individual income taxes, corporate taxes, sales taxes, and property taxes. Nearly $150 million in tax revenues have been generated back to the state as a result of this investment in our green economy. Let's go to the next slide. On the environment side, when you think about the deployment of all of that clean, renewable energy and energy efficiency, obviously with it comes cleaner air and the reduction of greenhouse gas emissions. So we actually use two Environmental Protection Agency tools here to help us calculate the emission reductions. The first is the AVERT tool, the Avoided Emission Reductions tool of the EPA. And you can see we have over 11 million tons of CO2 being avoided as a result of the clean energy that has been deployed in the state. You've got a few equivalencies there in terms of tree seedlings and passenger vehicles, but we also use the outputs of the reduction of that SOx, NOx particulate matter as inputs into an EPA model called the Co-Benefit Risk Assessment Model, which provides us public health benefits. It actually allows you to, through cleaner air, estimate the associated public health benefits resulting from that, avoided sick days, reduced hospitalization visits, and even death. So somewhere between $220 million to $500 million of lifetime public health savings from cleaner air as a result of the deployment of clean energy. We've been having fun with our equity metrics recently because as all of us are thinking about in implementing the Inflation Reduction Act, I'm sure all of us have become very familiar with CGIST, the Climate and Economic Justice Screening Tool, or EJ Screen, the Environmental Justice Screen. So working with our team this summer, we've taken all of our data to show where Connecticut would be if we were looking at the low-income and disadvantaged communities definition of the federal government. So we would be at 32% of our 40% target. Our target as an organization is by 2025, no less than 40% of investment in benefits would inure to vulnerable communities. You can see the vulnerable communities definition there. We're above it. But obviously, we want to go much deeper, and we focus a lot on CRA eligible communities. The Community Reinvestment Act is really important to us because these are financial institutions like banks who are making investments in CRA communities, and because we want to use a limited amount of public to mobilize lots of private, we want to ensure that the CRA is one of our key focus equity metrics. So you can see there that the CRA eligible communities is our stretch target. We've got our LIDACs and our vulnerable communities. So thank you, Rudy, for working with us on modifying that, Lucy and Caleb, over the last year. Let's go to the next slide. We're continuously not only wanting to focus on enabling more investment and benefits with a strong focus on vulnerable communities, but we also want more and more partners there with us to help us do that. So we've recently released a request for qualifications where we qualify consultants and other technical assistance providers. We want to see more women and minority owned and or led organizations applying for this. So take a look, there's a link here. We will provide the link in our follow-up to everybody so you all can take a look at that. But in terms of supporting areas that we focus on, obviously clean energy generation technologies, transportation, environmental infrastructure, hydrogen, all the way to new areas that we're excited about, like artificial intelligence. So we're interested in your technical assistance. So if you're interested, take a look at that RFQ. Let's go to the next slide. And I think with that, I'll turn it back over to you, Rudy.
Thank you, Brian. All right, so now we are going to move over to our home solutions, which include the Energy Storage Solutions Program and the Smarty Loan. And to talk about energy storage solutions, I'm going to turn it over to Ed Kranich, who is our Senior Manager of Incentive Programs. Ed, go for it.
Thanks, Rudy. And thanks, Brian. Can you hear me okay?
Yep, all good.
All right. Next slide, please. So I'm going to start with a quick overview of the Energy Storage Solutions Program for those who don't know. So Energy Storage Solutions launched in 2022 as a result of PURA's Equitable Modern Grid goals. And the program incentivizes homes and businesses to install battery backup systems paired with residential solar or with solar panels, like in most residential cases, or with or without solar panels for C&I customers, commercial and industrial customers. So the program has a goal of reaching 580 megawatts of behind the meter storage in 9 years. And we do that through two different types of incentives. One, we have a passive dispatch where a battery is pre-programmed for 10 years of daily dispatch from June through August. And that is in exchange for a one-time upfront incentive. The rates vary depending on the type of customer and the size of customer, but we have more information available at energystoragect.com. And the second type of incentive is the active dispatch, which is similar to a demand response program. It's paid by the utility to the customer after each summer and winter season, which runs from June through September and November through March. So the goal of this program is not only to provide customers with backup, with resiliency in the face of a changing climate, but also when they don't need those batteries for backup purposes, they can provide benefits to the grid by selling the power out of their battery to help lower Connecticut's peak demand in the summer and eventually in the winter too, which results in benefits for all ratepayers. Next slide, please. So right now the program is going through our 2024 annual review. Like I said, the program was created by legislation and it's overseen by PURA. So we go through annual and 3-year review processes with PURA to make sure that the program is providing the right benefits to the right folks, particularly ratepayers. The program has a requirement to meet a 1.4x return for all ratepayers. So for every dollar we spend on the program, ratepayers have to see a benefit of $1.40. So right now, we're about halfway through the annual review, and we encourage, it's not too late for any stakeholders to get involved and participate, because this is the way for your voice to be heard. Any concerns or anything you have, any thoughts you have on how to improve the program, now's the time to do it. You can do public or stakeholder comments, join the docket, and you can attend technical meetings. So right now on the table for proposed changes that we hope to make for 2025 is to shorten the dispatch window for passive dispatch from 5 hours to 3 hours, just seeing that we could provide greater benefits to the grid that way by allowing batteries to discharge more power in shorter, more energy in a shorter window for a greater overall peak demand reduction. We are proposing to simplify some of our paperwork and enrollment forms, including for contractors, customers, and for batteries, and adjust a participation rate requirement. So essentially making it easier for batteries to comply to earn their incentives in the program. Next slide, please. So our progress to date so far in the residential sector, we have about 528 units that are approved in the program for about 4.1 megawatts. This includes about 160 units of a residential multifamily affordable housing. On the commercial side, we're a little bit ahead of schedule, actually. We have 76 buildings for 155 megawatts of approved capacity, but we're currently paused until next year. So as part of that annual review process that I had mentioned before, are potentially new rates, new incentive rates for commercial customers. Because we went through the first tranches so quickly, demand was so high on the commercial side that our regulators, PURA, are looking to reassess what our incentive rates are. So we'll find out more towards the end of December, or I'm sorry, the end of November, what the rates will be in January. And for other news, we have finally, we have the residential Tesla Powerwall is now, we're fully accepting enrollments for that piece of equipment through the in-app enrollment on the Tesla app. So customers can go open their app, they can have their batteries joined for the active only dispatch portion of the program. And for any contractors out there or anyone looking to get involved as a participant in the program, we have an upcoming training on Thursday, September 26th. There's a link here, the CT Green Bank website, where you can sign up for the next contractor training. And for anything else related to the program, we have our program metrics, we have the list of eligible equipment and a lot of great info about the program, including a few recorded webinars from the past. You can visit energystoragect.com. So to that, I will pass it back to Rudy.
Thank you, Ed. So now I'm going to provide an update on the Smarty Loan. The Smarty Loan is our flagship program for homeowners. It was launched in 2013 and has now helped nearly 9,000 families make improvements to their homes. This includes projects like energy efficiency related things that increase the comfort or make their home more resilient. Smarty Loan is offered through a network of lending partners, local banks and credit unions, and the financing helps provide more than 300 contractors a way for homeowners to get these projects affordably financed for their homes. In fiscal year 24, Smarty Loan program continued to grow. It closed 1,285 loans, which was an increase of roughly 4% from the previous year. Last year was the third highest number of projects in the program's history completed in 1 year. These loans provided more than $27 million in financing to Connecticut residents, again, and a rather sizable increase of roughly 18% over the previous year. And this $27.5 million was the most loan volume that the program has done in a single year. And we think that that was driven by a couple of factors. Obviously, there's some impact of inflation making everything more expensive, right? But we're also seeing more comprehensive projects get completed. Those comprehensive projects do have higher price tags associated with them. We also saw a significant increase in the number of solar projects and battery storage projects, to what Ed was just talking about, come through Smarty this year. A really significant increase there. So it's good to see that the solar market is flourishing and using the Smarty loan to help their homeowners spread out the costs of solar over a number of years. The Smarty contractor base continues to expand. We are also preparing a bit for what we envision as future loan volume growth in calendar year 2025, in part because the Energize Connecticut heating loan is officially ending on December 31st. So we're hopeful that the Smarty loan can help fill that gap in the market and provide HVAC contractors with an option when they're dealing with homeowners who are interested in financing those improvements. Due to this anticipated growth, we are actively seeking new lending partners to join our existing excellent group of credit unions and local banks to help shore up the coverage across the state. We're also, this year, we've launched a number of new measures, and these new measures are related to resilience. Some of these measures are focused on water-related improvements, residential wells, things like installing high-impact glass windows and storm shutters, flood-proofing measures like French drains, elevating or relocating plumbing or HVAC equipment, basement flood proofing, over drilling or re-drilling wells, and connecting to public water and repairing leaking plumbing. We're currently seeking contractors in these fields. We've had a number of them already join the program, and homeowners are expressing interest. We've seen projects coming into the pipeline, and the first approved projects are in progress and being completed by contractors now. So I'm sure we'll have more updates at a future webinar to talk about some of these new resilience measures being implemented in homes across the state. So with that, we will shift from homes to buildings, and I will turn this over to Elise Lembo-Buzzelli, the Director of Program Development and Origination on our Financing Programs team, to talk about CPACE and a new campaign partnership that team has been working on. Elise?
Great. Thank you, Rudy. Good afternoon, everybody. So first, to give you all a little bit of a refresher on what CPACE is, which if we could go to the next slide. So just a quick refresher on CPACE financing. So CPACE is an acronym. It stands for Commercial Property Assessed Clean Energy. And it's a program that can be utilized by commercial properties to finance green solutions. So commercial properties, that really encompasses any traditional commercial property that you could think of, like an office building, retail facility, industrial facilities. Also covers nonprofit facilities such as houses of worship, YMCAs, private schools, community centers. Multifamily properties of 5 units or greater are also considered commercial. So really any property that is not a municipal or state property, so no town properties like town halls or public schools, and is not a residential property of 4 units or less, is eligible to participate in the CPACE financing program. And green upgrades or green solutions, that really covers a pretty good swath of things. Things like energy improvements, so renewable energy and energy efficiency upgrades, pretty much anything that will help to lower either electric or fuel bills and is permanently affixed to the property would be eligible. So energy efficiency upgrades like lighting upgrades, HVAC improvements, building automation systems, and then of course things like renewable energy upgrades such as solar PV are all eligible. And CPACE is also now available to finance EV charging infrastructure projects, as well as the newest addition to the program, resilience improvements as well. So unlike traditional commercial lending, CPACE financing offers term lengths of up to 25 years, which really allows property owners to spread their payments out over a long period of time and really realize their savings through the energy improvements that they're installing, resulting in overall better cash flows. And the CPACE assessment is repaid through a senior benefit assessment placed on the property. So not kind of like your traditional bank loan would be, where you have a monthly payment that you're paying to your bank, usually, you know, having to put a certain percentage of money down, and maybe not really seeing that positive cash flow. With CPACE, they're paying it through a benefit assessment. And the benefit assessment is very similar to other municipal assessments, like a city water, city sewer bill. So the CPACE financing repayment structure would follow whatever the billing cycle is in that town for real estate taxes as well as municipal assessments. Most towns in Connecticut repay their real estate taxes and benefit assessments twice a year. It does vary, so depending on what town your property is in, that will determine what the repayment structure will look like. And then lastly, the CPACE assessment stays with the property regardless of ownership. This is because the assessment is secured by the property itself. And since CPACE, as I mentioned, acts just like any other municipal assessment, if the property is sold, the new owner would take over the assessment and therefore all of the payments. But of course, the new property owner is going to enjoy all of those green upgrades that were done to the property before they purchased it. So that was a quick refresher on CPACE. And if we go to the next slide, we have a notable closing here that we want to present. So a few months ago, we closed the largest CPACE project that we've closed in Connecticut to date. It was a $55 million project. It was closed by Counterpoint Titling Trust. Counterpoint is one of our many private capital providers that is eligible to lend in the CPACE program in Connecticut. This project is located in Darien. It's a new construction project. You can see in the image there, there's a few buildings that are going to be constructed and will include energy efficiency improvements and upgrades as well as solar PV. And not only is this now the largest CPACE project that we've done in Connecticut, but it's also the first transaction to include a resilience improvement in Connecticut, which is a really big deal. We launched resilience guidelines for CPACE earlier this year. So this was the first project to take advantage of those. They included pervious concrete in the project as a resilience measure. So really great to see these large projects happening through our private capital provider partners. All right. And then next, to talk about another exciting thing, we've got a new CPACE partnership with an organization called OkoSync. We have an open RFP that's available to anybody that is looking to do a partnership with the CPACE program. And OkoSync presented a really excellent partnership opportunity that we have recently embarked on. It's through their energy program facilitation process. And OkoSync is a company that offers kind of a full swath of engineering services. They really act as an owner's representative to help a property owner really do a deep dive and determine what types of energy opportunities they have in their building to make it more energy efficient, of course, and more comfortable, just a better operating building in general. So we know, and OkoSync has also identified the fact that property owners are usually very busy running their businesses. So they don't always have the time to spend, learning and understanding all of the ins and outs of doing a comprehensive energy project. So they presented the opportunity for property owners to work with them really kind of from start to finish. And you can see here the organization of the process of the energy program facilitation service. Starts at the beginning, where they're able to help a property owner understand the energy opportunities, do an assessment of what their current energy profile looks like, and really take them through the process step by step. Help them understand, what the incentives are available out there. Work with them and with us on potentially getting some CPACE financing in there as well, and then actually helping them through the implementation of that project. So helping through the construction and the project management, also working on helping to get contractors in the mix to actually do the work. And then finally being able to help train and make sure and educate the property owner representatives on the new equipment that they've installed to make sure that it's being used and run properly, with some optional continuing measurement and verification opportunities at the end. So we're very excited to be working with OkoSync on this partnership. And if we go to the next slide, you can see how if you're a property owner and you're interested in learning more, this is how you can get started with that. The link is right there. It's ctgreenbank.com/EPF, which stands for the Energy Program Facilitation Service. You can read a little bit more about the program and the partnership. And there's a very short form that you can fill out to get started, and someone from the OkoSync team will reach out to you. But again, certainly a great opportunity. We're really looking forward to working with OkoSync and hopefully getting some really great comprehensive projects out there. Yeah, and I think that might be it for me. Yeah, so I'll pass it back to Rudy. Thank you.
Thank you, Elise. So now we're going to provide an update on environmental infrastructure related projects. As you might know, the Green Bank's successful model was extended in 2021 as a result of the bipartisan passage of Governor Lamont's House Bill 6441, which enables the Green Bank to cover projects related to a whole host of things: climate adaptation, land conservation, parks and rec, agriculture, water, waste, recycling, environmental markets. So with that little bit of background, I'm going to hand this over to Lee Welpton, who is our Director of Environmental Infrastructure.
Thank you, Rudy. And as Rudy mentioned, that reorientation to Public Act 21115 is super important in how it enables a new phase of the Connecticut Green Bank's effort to carry out our mission through a broadened scope and deepened commitment to environmental infrastructure, in addition to our focus on clean energy. So I'll just share a bit of a refresher on what that statutory authority allows us to do. It allows us to innovate and mobilize investment in projects that confront climate change by addressing the urgent need for environmental infrastructure. And that is defined as structures, facilities, systems, services, and improvement projects related to water, waste and recycling, climate adaptation and resiliency, agriculture, land conservation, parks and recreation, and environmental markets like carbon offsets and other ecosystem services. So we can go next slide. It's important context as we start to describe what it is that we're doing in the context of our expanded scope and authority. So I mentioned waste and recycling as part of our new statutory authority. And as part of this year's oversight of the energy storage, residential, and commercial solar dockets, or for those who like their acronyms, ESS, RRES, NRES, and SCEF, our state energy regulator, PURA, directed the Green Bank to run a working group to investigate the end-of-life impacts of solar and storage technology. So over the course of this year, we hosted a series of meetings to learn more about what the current regulations are, whether those are at state or federal levels, that govern these technologies, and to explore how we can better support the Connecticut clean energy economy by being good stewards of this material through the end of its useful life. For those who are curious and want to learn more about this end of life working group process, all meetings were recorded and are posted to our website, as well as the full final report submitted with the working group's findings. So that final report was presented to Pure earlier this summer, and the Green Bank is excited and looks forward to continuing to participate in the process of developing guidelines, both as a solar asset owner ourselves, as well as the co-program administrator of the ESS program, which you heard about a bit earlier. Next slide. Next up, the Green Bank, together with our partners, the Trust for Public Land and Blue Hill Civic Association, are pleased to announce the launch of our Hartford Park Score and Condition Analysis. This report consists of two parts. One is an assessment of all parks in Hartford, and two, a comparison of the park system with other cities in the state and nationally to identify strengths and weaknesses. This detailed report highlights a systemic need for investment in Hartford's parks, whether that's amenity improvements, accessibility improvements, or other operation and maintenance investments, or even the creation of, and particularly with a focus on the needs of neighborhood parks. Overall, this report sparks a conversation about park benefits, park stewards, park creation and development, and maintenance needs, both in our hometown of Hartford and our public green spaces, as well as how we think about these issues more broadly. And that report is available at the link here on our website and on the website of the Trust for Public Land. Next slide. Another quick update from the environmental infrastructure side, but an exciting one, is the expansion of our Capital Solutions open rolling RFP. We've heard from a couple of our colleagues today about different Green Bank offerings. Capital Solutions is yet another that is specifically created to enable opportunities for projects that do not meet other programmatic criteria. So the Green Bank Capital Solutions allows for the review, the competitive selection, and award through an open RFP process. It allows us effectively to receive requests from the market. If you are listening to this and you yourself are a project development partner or potential project sponsor, it allows us to receive requests from you about projects that may benefit from financing within the scope of our comprehensive plan, and speaking from the environmental infrastructure perspective, from our expanded scope and statutory authority. So we're really excited to share, as this RFP was just expanded this summer from clean energy to also include environmental infrastructure. And I'll put out an open invitation. We are excited to begin talking to project sponsors about what ideas they may have for great opportunities for investment. So if you're working on something that might be appropriate through the lens of environmental infrastructure or more broadly clean energy, please do get in touch. And with that, I will turn it back to you, Rudy.
Thank you, Lee. Yeah, very exciting that that open RFP is now inclusive of environmental infrastructure. A lot of really cool projects have already come through that RFP, and we're excited to see more. So if you're hearing us today, please reach out and propose your ideas. Now we're going to turn it over to David Beach, our Senior Manager of Clean Energy Finance, who's going to give us an update on the Green Liberty Notes program.
Thanks, Rudy. Yeah, so I'm excited to talk to you today about our Green Liberty Note program, which allows Connecticut investors to invest in the type of work that we here do at the Connecticut Green Bank. So we can go ahead and go to the next slide. So we're really excited to announce and share with the public that our Green Liberty Note program received a SLICE award that stands for State Leadership in Clean Energy. This is given out by the Clean Energy States Alliance. You can see a photo of me there, and I just want to read one of the quotes from the judges. They said, "The Connecticut Green Bank's Green Liberty Note program is innovative and opens the rewards of the clean energy economy to a new community, extending the benefits so everyone can participate the threshold to entry is low, and the return on investment is good. Other states could adopt this highly replicable and cost-effective program. So this was a really great validation of our work here at the Green Bank. We created these Green Liberty Notes, as the judges said in their quote there, to really make investing in clean energy more accessible to everyday folks in Connecticut and across the country. We've talked a lot on this webinar about the loans that we make and the investments we make, including for homeowners. But we also wanted everyday folks to be able to take some of their savings and be able to invest it in the green economy and share in some of the financial returns that we are generating from our work to accelerate clean energy in the state. And so that's why we created our Green Liberty Notes. And on the next slide, I'll give you the quick bullet points on what they are. So we've now received more than $3 million of investment. Your next chance to invest in Green Liberty Notes is coming up on September 25th. We put Green Liberty Notes out into the market once every quarter. Some investors in the last round, the interest rate was 5.25%. Green Liberty Notes work like a one-year green CD, essentially. You invest in a Green Liberty Note, and after a year, you're going to receive your money back with interest. Or if you'd like, at that point, you might have the opportunity to invest in the next round and reinvest your interest and principal and kind of take advantage of compound interest like that. And so what is your investment going towards? Well, all of the investments help Connecticut small businesses improve their energy efficiency. The Green Bank supports and purchases loans in what we call the Small Business Energy Advantage Program. That program provides loans that are interest-free to the customers, so they can do energy efficiency improvements and actually pay those loans back on their utility bill, which really makes it easier for them to do these energy efficiency projects. And the customers are generally small businesses, but also municipalities and towns that have buildings that they want to modernize and improve efficiency on. So we really encourage you, if you have some money sitting in a savings account that's collecting, pennies a year, invest in a Green Liberty Note. It's 1 year, you get your money back with interest. And the great thing about it is the minimum investment is only $100 and you don't need to have a broker or anything. If you go to greenlibertynotes.com, it can take you 10 minutes to invest, maybe less. But we also encourage you to read all about the notes, how they work, how your investment is secured, and sort of all the sort of expectations you might want to be interested in. So really encourage you to check that out. The next one will be launching in September. And then after that, it'll be January and April and every 3 months, essentially. So please look out for that. And with that, I will pass it back to Rudy and others to continue us on our way here in the webinar. Thank you very much.
Thank you, David. Yeah, Green Liberty Notes, a very exciting opportunity for folks to invest. We're nearing the point where we've almost got an investor from every state in the country, and we're trying to get one from every municipality in Connecticut. So if you're listening, please consider it. Get on our emailing list and be sure to look it over when that new offering comes out later this month. So now I'm going to turn it back to Brian Garcia for some closing thoughts.
All right, let's go to the next slide, Rudy. So about a month ago, we all celebrated our 2-year anniversary of the signing of the Inflation Reduction Act. I'm sure the audience out there is all very steeped in realizing the benefits from the signing of that public policy on August 16th, 2022. We had a 2-day celebration here at the Connecticut Green Bank with our team. We really dug into several provisions within the IRA. The first is the Greenhouse Gas Reduction Fund, and the second were investment tax credits. You all have heard us from time to time talk about the Greenhouse Gas Reduction Fund, and that the history of the Connecticut Green Bank actually lies in the failure of a federal policy, the American Clean Energy and Securities Act. actually included a Clean Energy Deployment Administration, which was a national climate bank in the 2009 bill. Some call it the cap and trade bill, the Waxman-Markey bill. But when that policy passed the House on a partisan basis and never passed the Senate, the proponent of the bill, Reed Hunt, who was leading the charge from the Coalition for Green Capital, brought the concept to our state here in Connecticut, and we were Section 99 of Public Act 1180. So therefore, the first state level green bank created in the country. So we provided a lot of that fun history to our new and growing team here at the Connecticut Green Bank. We delved into Solar for All. There are many of you out there who competed for and are now planning and implementing your Solar for All programs. Here in Connecticut, we see a really strong market for residential solar. 2023 was the strongest year in terms of Connecticut's deployment of residential solar. I think we had 160 megawatts of residential solar, the highest on a watts per capita basis in the entire Northeast. So let's keep that going. But we want to make sure that those systems are being deployed in vulnerable communities, as we talked about before. So ensuring that our low to moderate income families are realizing the benefits of those technologies. So really important. And our Solar for All efforts being led by Deep here through our project Sunbridge, which was a winning proposal, will focus in on multifamily affordable housing, where we really have built and structured a market where we think we're going to be able to realize benefits for families who reside in affordable housing. And then secondly, the National Clean Investment Fund. We are super excited to have supported the Coalition for Green Capital, which was the large winner of the National Clean Investment Fund. Again, they were the proponent of the National Climate Bank back in 2009. They led all the public policy efforts over the last 10 plus years, leading to that provision of the GGRF within the Inflation Reduction Act. So we had a really fun time with the staff digging in to all the history, but also the future of where we plan to go by investing these resources in our economy here in Connecticut. We also dug into, as I'm sure a lot of you out there, in the investment tax credits. We all know that there are a lot of different opportunities within the IRA that provide tax credits, from green hydrogen to carbon capture and sequestration to energy efficiency, electric vehicles, and the sort. But we focused in on 48, which is the investment tax credit that typically the renewable energy industry is familiar with. The 30% investment tax credit. But we wanted to make sure that our teams were aware of the additional adders that come on top of the 30% for energy communities, those communities that are in transition from fossil fuels, either through formerly run coal-fired power plants or coal mines. We have several MSAs in Connecticut, metropolitan statistical areas, Fairfield County and New Haven County, that are energy communities that provide a 10% adder on top of that ITC. We have low-income communities. I talked about CJIS before, the Climate and Economic Justice Screening Tool. We know where our low-income communities are to get an additional 10 to 20% on top of that tax credit. There's a competition for them. There's a cap on them, 1.8 gigawatts a year. We're positioning Connecticut to be front in line on those incentives. And then, of course, domestic content. I think there are very few technologies in this country that receive the domestic content requirement, but I am happy to say that our thriving baseload fuel cell, stationary fuel cell industry here in Connecticut has access to the domestic content requirement, at least for 2024. We're looking ahead to build fuel cells back into that 48 tax credit. But we're really looking at focusing those tax credits on the multifamily affordable housing market, as I was noting above. A big thank you to Senator Lopes, who led the effort in Connecticut to provide Section 2 within Public Act 2148, essentially saying that affordable housing shall be deemed residential. So they are now a part of the Residential Renewable Energy Solutions Program. A big thank you to our partners at the Public Utilities Regulatory Authority, PURA, that oversees the RRES program, inclusive of affordable housing, and our colleagues at DEEP, the Department of Housing, and CHAFA, the Connecticut Housing Finance Authority, for working together to build and structure this market so that it can receive investment for affordable housing. And we're going to go right at it. We're going to apply our soup to nuts programs, as Elise has talked about, showing OcoSync. We've got a variety of other technical assistance to financial assistance programs that are going to help our customers get from point A to point Z so that they can realize all those meaningful benefits. So our team had a fun time with the second anniversary of the Inflation Reduction Act. Let's go to the next slide. Oh, actually, one more point there. I forgot to note, I included that little Apple Watch in the upper corner because there are very few moments in our lives where we know where we were when something was announced. And I wanted to say that by showing this, that on the 27th of July, that was the date at which Senator Manchin and Schumer had reached agreement, and it became public that this act was going to pass. And I received a call at 7:35 at night from Reed Hunt, who called me to tell me that it was successful in including the National Climate Bank legislation, the Greenhouse Gas Reduction Fund, modeled in large part after the Connecticut Green Bank. So just a big shout out to Reed and all the work there. Let's go to the next slide. As we're approaching Climate Week in New York City, the week of September 22nd through the 29th, here in Connecticut, we decided to organize a Sustainability and Resiliency Week. Our governor has put forward a program with various state agencies and our partners out in communities across the state. And we have organized several events. One is in Fairhaven, a roadmap to resilience where we're driving resilience improvement and investment. I think an undercurrent of a lot of what we've talked about today is the Green Bank's entrance into the resilience space. Again, our mission is to confront climate change, and as we're dealing with its impacts, resilience is going to be really important. We've also got a second event on the docket, Sustainability and Innovation in Mystic's business community. So we're going to be at the Mystic Aquarium, where you can see in the photo there solar on the rooftops, and we financed energy efficiency improvements there with Mystic Aquarium 2. Obviously, lowering operating costs means that Mystic can advance its mission more to bring environmental education about the importance of wildlife in our oceans. So important that we address energy. So stay tuned for that. If you want to participate, click the link there. Let's go to the next slide. And then just lastly, kind of wrapping up resilience here, we just released a report with the Connecticut Department of Insurance being the lead. You can see the commissioner there, Commissioner Andrew Mays, who, working with the Robert Wood Johnson Foundation and the Connecticut Green Bank, brought together several organizations, Operation Fuel, Yale University, the Clean Energy Group, to pull together a report that looks at climate smart technologies. We can think about these technologies as solar, battery storage, heat pumps, weatherization, those things that are going to be real important as we live and experience a changing climate. For medical devices, specifically, there are tenants within affordable housing that reside with home medical device needs. So we wanted to understand and do some research on what is important to them as disasters are coming. How are they preparing for, how are they dealing with and responding to natural disasters so that we can help them shelter in place to the best of our abilities. And that study here was released by Yale and Operation Fuel. We're going to be hosting a webinar with the Clean Energy Group on October 1st to talk about the findings of that research, as well as all the technical assistance that the Clean Energy Group is doing with affordable housing around the state. And then, of course, our financing programs that I just talked about that we have for affordable housing so that we can realize the investment in and deployment of clean energy to realize those benefits for our tenants. I think that is it, Rudy. Let's go to Q&A.
Thank you, Brian. Yeah, let's go to Q&A. We've got a few minutes left here. I know a few of you have already put questions in, and I've answered some of you directly, and we'll follow up with some of you after the fact had a couple contractors who had specific questions that will get you some information, hook you up, and that'll be great. We do have a question that I'm going to pose to Elise related to CPACE. Two parts here, actually. What is a senior assessment? Is that a first position lien? And how does that affect mortgage and or lien transfer if the property sells?
Yes, great question. So a senior assessment, that means, to your point exactly about what position the CPACE assessment has on the property. Senior assessment means that it would come before any other property secured debt. So real estate taxes are always going to be first in line no matter what, but the CPACE assessment would come right after that. So if there is an existing mortgage on the property, we do require, this is a statutory requirement of the program, that the existing mortgage holder or lender needs to provide consent to subordinate to the CPACE assessment. And I know that always sounds scary when you hear that, and sounds like something a mortgage holder wouldn't be interested in doing. But a really key piece of why we've been able to get consent from many different lending institutions in Connecticut over the last 10 or 11 years of the program, is because the assessment, the CPACE assessment, is non-accelerating. So again, I made the comparison to a municipal assessment, like a water or sewer bill. So in, let's say, the event of a foreclosure, let's say worst case scenario, mortgage holder needs to foreclose and there's a CPACE assessment ahead of them. The only portion of that assessment that would in fact come before their mortgage would be anything that is unpaid or late. The term is in arrears when you're speaking tax collector speak. So realistically, the mortgage holder is looking at maybe 6 months or a year's worth of payments on the CPACE side before that assessment is current, and they would get the remainder of their mortgage in that situation. So really, that's, I think, what gets mortgage holders most comfortable with providing that consent to subordinate. And then in terms of the transfer of a property, same thing there. If the property is going to be sold, a new owner would come in and take over that assessment, just like they would if there was a water bill or a water assessment on the property. They would continue to pay that and enjoy the benefits of city water. So that would be the same situation with CPACE. Whatever the remaining assessment term is, the new owner would come in and take that over. So of course, the current owner would need to be current on their payments before they sold their property, just like they would any other assessment or tax, and that would be the same for CPACE. I think that answered all the parts. Did I miss anything, Rudy?
No,
okay.
No, that's perfect, Elise. Thank you.
Great.
So we had a couple of Smart E related questions, and I think I'm going to sort of share the mic on this because I can answer part of it, and Lee, I'd like you to chime in on part, and potentially Brian. So a couple of parts here. One was about the Smart E rates recently increased and whether or not they will potentially adjust if the Fed rate drops. So for context, the Smart E program had its first rate adjustment after being in the market for 10 years. That was last year. And then we recently adjusted it, increased it again earlier this month. So I guess, Brian, do you have any thoughts on potential rate reduction as things change in the broader economy?
Well, I wish I knew where rates were going, but in the event rates come down, I think what we will do is we will assess where the market is and make adjustments accordingly. Obviously, the higher the interest rate means the more pressure on less deployment of clean energy. Interest rates are really important. So we will reassess as the interest rate at the Fed adjusts. We will adjust accordingly. But it's important to note that we had to make those adjustments from not to exceed levels because our partners, our credit union partners out there who are the source of private capital, need to make sure that they are operating themselves within the context of interest rates. So we just had to modulate accordingly.
Yep. During that Smarties section, I mentioned something that was coming to an end, and someone has asked a question about what that was. I was mentioning the Energize CT heating loan is coming to an end at the end of this year. So that will no longer be offered after December 31st. The other Smarty question, I know we're at time, but I'd like to get this one last one in, I think, before we close, was about the potential of hooking into public sewer for a household using Smarty Loan.
It's a great question, Rudy. This is Lee from the Environmental Infrastructure team. And I would need to check internally on where we are with that, but that has been in discussion of an eligible climate resilience and water measure.
Yeah, thank you for that, Lee. Yeah, a future measure perhaps. So the asker of that question, please stay tuned, because we think that may be something that comes in the future. All right, so seeing that we are at 1:01, I know there's some questions that we didn't get to, but we will do our best to follow up with you all directly. And we will close the webinar here and thank everyone for their time today. We appreciate it. We will send out a recording as well as some links to other resources. And again, thank you all for joining today, and we will talk to you all soon.